Alright, we got a trade recap today for Tuesday, March 25th. Took this W today on the NASDAQ, so we're going to go over my bias, what I was looking for coming into the market open. I had a bullish bias today, even though we are within this weekly fair value gap. Like I said, I wanted to see that retracement to yesterday and then in the weekly outlook video. So we're within this weekly fair value gap, where I want to start to see higher time frame structure form to the downside, and we get continuation to the sell side liquidity and continuation downwards. But we can't just automatically be bearish once price enters the weekly fair value gap. We need to have the higher time frame structure to confirm the bearish bias once we get into this area of confluence. And what does that mean? That means structure forming a swing low put in like this, displacement below a swing low, pullback, respecting bearish imbalances, to then see continuation downwards to this new week opening gap, and then to eventually, hopefully, this weekly sell side. So this is what I'm eventually looking for, but we just entered this high time frame weekly fair value gap. So I would need to see displacement lower on the higher time frames, such as the 1 hour and the 4 hour. But when we go to the 1 hour and the 4 hour charts today, we're still bullish. And I noticed that we have this prominent high within the weekly fair value gap. This is a 4 hour high. In addition to that, if we go to ES, I deleted the weekly fair value gap on ES just because to make my charts cleaner, but weekly equilibrium lies within the top of this weekly fair value gap on ES as well. So there's still reasons to potentially head a little bit higher before getting confirmation of heading lower. So this, with the 4 hour and the 1 hour charts still being bullish, the daily chart, if we look at this daily candle, we just displaced higher. So I'm still looking to be, I still have reasons to be bullish to this to this buy side, which is within this weekly fair value gap. So 4 hour still bullish, the 1 hour still bullish. Coming into the market open, I noticed we had this 1 hour fair value gap here, and we also had a 1 hour fair value gap right here as well. So with this being my drawn liquidity, I was looking for a pullback into these higher time frame fair value gaps to find the internal model and then get that take a long to the upside, and that's exactly what we got. So if we scale in even further, equilibrium, let's just go into market replay real quick. It was the same situation on ES as well. NQ was just a stronger index, so I'm just going to go full screen NQ. But if we take equilibrium of the pre-market move, equilibrium lies right here, right above this second 1 hour fair value gap. And I'm zoomed into the 1 minute chart because, let me just delete this as well. I'm zoomed into the 1 minute chart because I want to take advantage of that market open volatility within the first 30 to 40 minutes of market open. Usually tapping into a 1 hour fair value gap, I'd be scaled into the 5 minute chart, but I'm scaled into the 1 minute because I'm expecting a volatile move within the first 30 minutes of market open. We also had 10 a.m. news drop 30 minutes into market open, which played a huge part of this trade as well. So we'll get into that. But market opens here. We have this liquidity that I want to see get ran. I want to see us tap into this higher time frame imbalance, and then tap into equilibrium, rebalance to equilibrium as well, and then get bullish reactions out of here. So if we just continue in price, we eventually start to form a little bit of structure within this first hourly fair value gap here, but there wasn't enough for me to take a trade because there was no displacement above a swing high, which is why I wait for that. So we never get any displacement, and we eventually come down and rebalance all the way back down. See, we got a market structure shift here, but there was no displacement and no 1 minute fair value gaps that opened up within the range, so there was no trade here for me. So that's why I'm very patient when it comes to that, because we eventually come back down, sweep these lows again, and then we get our displacement, This is now during the 950 to 1010 macro. Then we get displacement and a market structure shift above this swing high after taking this liquidity, after rebalancing to equilibrium, and after tapping into this lower 1 hour BISI. So now, once this move happens, I have limit orders set at this 1 minute fair value gap right here. I'm looking to go long once price comes back down and taps in and take longs to the upside. If we also take equilibrium of this price range here, this displacement leg, equilibrium lies right within this 1 minute fair value gap. So there's a lot of reasons for price to come back down, rebalance here before heading higher. But like I said, we did have 10 a.m. news that's about to drop, and you'll see how volatile the news candle is. Is it this one? Boom. This is the 10 a.m. news that drops. We eventually get a huge push up, get close to taking the external buy side, this 1 hour buy side liquidity. We never take it. Then we come back down. And at this same exact time in price, ES is down here and has made new lows, or is making new lows. So we're putting in an SMT while this candle rebalances to this 1 minute fair value gap right here. So I get tapped in here, and even though ES is making new lows, NQ is still up here and rebalancing, and is holding this 1 minute fair value gap for the time being. And so that's really bullish to me, because that's telling me that there's manipulation. If ES is taking out these lows and NQ is holding higher and rebalancing price, the model is still there. That's just extra confluence for me. So if we continue in price, yes, we do close below this 1 minute fair value gap, and sometimes once we disrespect the last remaining fair value gap in the range, I would exit once we close below. But like I said, we were putting in that SMT at the lows, which tells me that there's still manipulation. So my stops were originally down here, which tells me that there's manipulation going on. And also I want to allow my trade to play out with that 10 a.m. news volatility, because when that news volatility comes out, it's not always going to be perfect. You're not always going to hold each and every fair value gap, but that news volatility, that news, 10 a.m. news brought that volatility into the market. We then came down and manipulated the lows on ES, and we held price higher on NQ. So we have that SMT, so there's no reason for me to get out of the trade, even though we did close below the fair value gap that I entered on, because I'm expecting this to hold. Why is that? Because the draw is still higher. So then we come back up, and we close above this last remaining bearish fair value gap within the range. So we're holding this SMT, and then we disrespect all the bearish imbalances within the range. I originally entered with 2 contracts, and then I added one more once we got an inverse fair value gap right here. Because after holding this SMT and disrespecting each bearish fair value gap within the range, this tells me that we're going to head higher and this SMT is going to hold. So I add one more contract here and move my stops up to below this SMT swing low right here, because this is now the protected low. If this low gets taken, then this low is going to get taken and I would be stopped out of the trade anyways. So I'm just maximizing my risk to reward on this trade right here. So I entered another contract long, so I'm now in 3 contracts, and you can see that we continue to get bullish reactions to the upside. Extra confluences we did, this was the 10 a.m. news candle as well, and we put in this data high. Look how irregular this wick is. This is a nice pull and draw on liquidity after this candle wick gets put in. Price is normally going to seek out this irregular candle wick. It's just something that I've picked up on through my years of trading. When we have high impact news, or today was actually orange folder news. It wasn't even high impact, but it was consumer sentiment, I think. But it affected the market a lot. So came up, put that data high in, and once we take out this internal swing high and this data high, I moved stops to break even. Because once we get this high up in the range, there's no reason for price to come down all the way back down to my entry, unless we're going to stop me out. So just to protect the capital, for me at this point in time, there's no reason in my eyes for price to come all the way back down to my entry. So this was the data high. This is also the high that I put my stops at break even at. Then if we continue to hold this 1 minute order block here. This holds price higher. And this took a while to play out actually, but I recorded the trade live. I'm going to post it on TikTok and YouTube Shorts. But I said once this bearish fair value gap gets ran, we're holding this order block. Once this inverse fair value gap eventually gets ran and closed above, there's nothing else stopping price, and we're going to take the 1 hour buy side liquidity, which is exactly what happened. If we advance in price, the next candle takes the buy side liquidity, and that is the internal 1 hour market maker buy model after tapping into the 1 hour fair value gap. Yes, the draw was higher to this 4 hour buy side liquidity, but considering the fact that we were within the weekly fair value gap, and considering the fact that we're not in the macro anymore, the 950 to 1010 macro anymore, this took a little while to play out with this chop here. I went ahead and took all contracts off at this internal 1 hour high because honestly, this is all that I need to see. This is all that I need to be profitable, right? Yes, it would be nice to hold a contract to this external high, which price eventually did go take, but that's more of an expansion model per se. So I didn't have complete 100% confidence that we were going to take this high, like for the time being, because price could easily come back down, chop around the rest of the day, and then maybe we go take this later in the PM session or overnight. I didn't have 100% confidence that we were going to go take this right this second. So I didn't hold to the external draw liquidity, but I did take everything off this internal high. That's a 2 RR trade. That's all I need. A 1 to 2 RR trade. That's all I need. That's all you need to become profitable. So I took everything off there. And that is the trade recap. You can see we pretty much took this external high. I'm probably going to go take it. So, yeah. If we zoom back out, tapped into this 1 hour, got bullish reactions out of it, and now we're going to go most likely manipulate this high within the weekly fair value gap, and then from here we're gonna have to see what kind of higher time frame structure forms within the weekly SIBI. So if I want to start to see lows get displaced and closed below on the 4 hour and the hourly charts, and then to eventually target this new week opening gap down here, and then to eventually target these lows if eventually these lows, but for sure want to see this new week opening gap get closed later on in the week, but need to see confirmation on the 1 hour, 4 hour charts and start to see some displacement lower to confirm that bias. But that is the trade recap for today, Tuesday, March 25th. And if you watched the trade recap yesterday, that was a frustrating day because I knew exactly where the market wanted to go and still got stopped out. But today eats yesterday's loss times 2. Like, I was up 2 to 3 R on this trade. So, insignificant profit on the week, and it feels good. So, yeah, man. I recorded the live trade and execution as well, so that will be up on TikTok, YouTube Shorts, Instagram, whatever. So go tap in with that if you'd like to see the live execution. But yeah, man, that's pretty much going to do it for me. That's the trade recap. Appreciate you watching. I'll see you on the next one. Peace.